All right. Good morning, I guess. Turnaround Tuesday, is it? Maybe, huh?
Let's hope for a
Is that what's
turnaround
going to happen
Tuesday.
here?
Manic Monday
Yeah.
really did a rug pull on us. Uh,
Yeah.
God, yeah, it was like the short-lived crypto bump from Trump's announcement on Sunday, and then it just sold off. And by the end of yesterday, I was thinking a lot of charts had made a higher low. I mean, had made a higher high on Friday and left us with a higher low by the close on Monday. But now I'm looking at a lot of charts, and a lot of them are just right back to where they were.
Yeah, some
Um,
some are even lower, like Nvidia and stuff too, So,
yeah, well, you talked about we kind of anticipated Nvidia maybe going lower, but other
yeah.
charts are just kind of going making new lower lows too. So I've got to, as far as my charts go, I need to see a higher high and then a higher low before I can project higher. And a lot of them have just made a slightly lower, um, larger degree wave two, and I can still make some projections off that, but until it starts, can't really. I would just be updating the charts like every day, like all the charts I'd have to update every day. That's just too much work. I really want to see a higher high and a higher low, and I was suggesting to Matt this morning maybe we do a slightly different show. Instead of taking all your requests, I mean we'll still take some requests, but maybe we just try to
Yeah.
talk. We look at the charts and try to puzzle out. Well, if today, if it doesn't stop the bleeding where it opened, where it is in pre-market now, where how much deeper could it go? And that was my objective,
Yeah.
I think.
Yeah, let's jump into that too. But first, I kind of want to just show everybody how nothing really is broken yet. We can go to the SPY and see that it's back in a normal range, and you can see that back in January, price was actually lower still was now. It opened much lower there and
Yes.
is still a higher low and is still above the baseline, the 576 right here. Still above it. Right. So nothing is technically broken on this SPY chart. It's just a normal retrace so far, going a little bit deeper. But it's still at normal appropriate levels. So with that said, we can look at the Q. And yeah, this one's going a little bit deeper too. It's actually breaking below the 1.414 and the baseline. But you know what? It actually still never touched this 50-week moving average for how long? Since it broke out. 2 years. March of 2023. For 2 years and never touched it. So that could be the destination where it wants to go for 84. Right. But also, this is still the market structure is still fine. Right. This is not a bearish market structure. It's higher highs and higher lows. And with the IWM, this one's also going a little bit deeper than expected too. But you still have all these moving averages down here. But one thing I wanted to point out is the monthly chart for this. And the monthly baseline actually sits right there at 203. So 203.33 with the 50-month moving average. So that could also be the destination. And when you look at the monthly chart here, you can really see the market structure, how this is technically its first higher low that it's trying to find, right? Since the bottom here in October of 2023, it never really tried to find a higher low until these past 4 months. So that is technically still a bullish formation too. This is why it's not technically a bear market. And just wanted to point that out, that this is why I pay attention to market structure more than just levels sometimes. And yes, levels do change, but market structure is king, right? It tells us if this is still a bullish market structure or a bearish market structure. And all three of these are still a bullish market structure. So with that said, tracker.
Yeah, I'll pull back up your SPY chart again.
Yeah.
So I was looking at the SPY. I guess yeah, just the baseline on that, the Ichimoku baseline on that. So if it drops to that, that's about what's that number right there?
It's 576.
The Ichimoku baseline,
576.
576. So just kind of look out for that. If it should drop to there. Hopefully, we'd see it bounce off of that,
Yeah.
and then want to see it get back over 585. But you're right. Like as far as his, was it the weekly or the monthly? Yeah, I was just looking. Show me the monthly again.
For SPY, yeah, monthly still just never even touched the
Yeah.
conversion line too. Like you can see, the
Oh
monthly
yeah.
is a perfect illustration
It does
of
look really good.
it's a perfect illustration of something that melted up and people want it to continue to melt up, but charts don't really work that way all the time. And 561 is that conversion line for the month, right? So if it wanted to, it probably could go drift down there for a higher low on the month to month basis, right? So this could be a patience game for a lot of people here. I'm not sure how many people can handle that, but the things that already got punished, maybe they won't get punished so much, but the things that have been melting up with it that kind of look like this, they might get punished a little bit more. So, with that said, I think, yeah, what I see is honestly really crazy, but at the same time, it's kind of not out of the ordinary because things just don't melt up like this on a month to month basis all the time. And this is something that's unique, just like things down, like right here from 2021 to 2022, right? It eventually had a very vicious recovery. So if we do get a serious melt down a little bit, then we'll probably get a vicious recovery out of it. But we'll see if people can survive that or not.
Oh yeah. More liquidity wicks.
Yeah.
Liquidity grab wicks.
And I
Let's see.
see
I was trying to look at it. Go ahead.
No, I see. Just Bitcoin. Is it in a bear market? Well, Bitcoin, no, right? It's go back. It's back to where it was basically last week. Still not as deep as last week, and it's still trying to hold this 83,558 zone. So no, Bitcoin's not in a bear market. It's also higher highs, higher lows, and this is technically kind of its first higher low. Is really looking forward to. You can kind of see that on the monthly chart as well, right? It's just searching for a higher low after this one that took this one for the higher low, it took 1, 2, 3, 4, 5, 6 to find it, and so far it's been about 4 months to find this one. So we'll see if this is going to hold or not, right? And I think it has a good probability of holding on a week-to-week close, simply because this does not. It's not that scary, right? It's not that scary because it's under of a fib level, and it has potential to build a base here, right? So it's not, to me, it's not that scary. It's
I
kind of
have a
normal, but yeah, go ahead.
I have a hunch if you put the 2 week chart on of the same, just change it to 2 weeks, maybe we'll see an actual Moribotsu candle. It almost looks like a Moribotsu candle for that 1 month. Yeah, so see, it's like you have these this giant, you know, these big three candles going up, and it's just back testing into the big Moribotsu candle, the green candle.
Yeah.
So yeah, it's fine. Yeah, it broke out, back tested. So far so good.
Yeah. Do you have any charts you want to share?
I was trying to tease out something from the spy. If you show my screen
Yeah. Go ahead.
from an 8 hour perspective, I pulled a bunch of these blue lines. So, we're here right now. And if it wanted to, in other words, if either where the candle body is right now, either it just recovers at the open and we just get a really nice startling recovery, which is what I'm hoping for. We kind of got the start of that yesterday and then it fell over. But either we recover and we go back. The tendency is it's going to want to go back to this pivot up here at 595.98 and into this cloud. But if for some reason it just has to test lower, the next candle wicks it's looking at is this one right here, which is at 577.71, or even this one right here at 575.05. And that's just what I wanted to show you guys next. If it doesn't hold here, then these are like the next candle it looks back at. And then if it doesn't stop there, then it goes back to this one at 568.27. And you just kind of do the same thing. This is just back since November. All these candle wicks. This one, this one, this one. That's pretty much it. So we almost held this one right here, but it went just a little lower. Tesla. Let's look at Tesla. I just want to show Tesla real quick. Same thing right now in pre-market. Oh, just a slightly lower we had on Friday. So it keeps pushing this wave two down farther and farther. And if I look back, what do we see? We kind of see this was resistance, and it's trying to show it a support. If this doesn't hold, it could test this one right here at 264. I mean, we got a double here and here. Here were pretty important. So, oh man, I would love to see it hold right here. If not, it's a 265, then 239. I know a lot of people are calling for 250. We'll see. 251.22 was my 30.2% fib extension off of uh, a low of 23.37 to the all-time high, the previous all-time high of 414.50 to that 101.81. So how far did we get on that scale? We got to almost 100%. So 100%, 50% would have been nice to hold. Back to the 382 makes me say it wants to go to the 1382 after that. So as far as my LED waves go, if, for example, like I'm just saying, if the wave 2 stopped here at 251, I'd be looking for 642 after that. Because it would kind of go, it was more than 764, down to the 382, and then up to the 1382 next. Anyway, that's the kind of action I'm looking for in Tesla. Just when after you see a big crush down like this, it's just pushing that beach ball deep under the water, and when you let go, it has to pop up.
Yeah.
And all right, I think that's all I wanted to say about that.
Yeah,
maybe we should just do requests.
I can show a Tesla too. Somebody thinks you or me is arrogant too. I don't know.
Okay.
I don't understand that. We're just trying to help everybody.
We're
not trying to be we're not trying to say we know everything, but what I am trying to say though personally is that this stuff kind of happens, right? Stuff does go deeper and deeper, but it doesn't change the market structure. And with Tesla here, it's actually trying to battle this 702 right now, the 272.79 pre-market, and it is holding kind of. It's going through it, and we can see that the 50-week moving average is right below it at 266. And guess what? Since it broke out right here, it never touched it once, and that was August of 2024. So it is possible to go back and touch that, right? It's always possible to touch these support levels, and the reason why it's called a back test, right? This is not trying to be arrogant or whatever. This is how markets work. If one level loses, then there's probably a lot more liquidity below, so price gravitates those points. And if this gets lost, it's also basically around the same price as it was last week, this wick, right? So this, what Tracker was saying, could be like a tweezer bottom maybe and recover nicely. But if not, then maybe it does need to get the liquidity below. So this is like where it's going to stop. Nobody knows. It's kind of like a merry-go-round, right? Where it's going to stop, nobody knows. But the fact is, we can identify something that's still in a bullish market or in a bearish market. And this is something that we have seen numerous times, or I have especially. I've been doing this a very long time, and this is something that is not bearish, right? This is technically speaking, on the high time frame. I'm not talking about low time frame. I'm not a low time frame trader, right? If you want somebody that does day trading, that is really not me. But this is something that's on a high time that is retesting a major zone here, and whether it goes deeper and deeper, it doesn't really change the fact that it's still a support zone, right? It's still a zone that is testing lower lows, or lower levels, I should say, because you can see here there's a support zone that it tested here last week, and then here, and you can see how basically it's like a ladder that steps down, and it can go down and test all of those levels, even like down to the 260s here, where this wick was, where this wick was, where this wick was, right? There's a lot of demand though there. So if you just basically drew a box right here, and
the Darvis box.
The Darvis box. If we just drew a box, this is a demand zone. This is a demand zone right here. And how do we know this is a demand zone? Because you can keep pulling it out, and you can see all of these here acting kind of as a support down here, as a resistance up here, a support down here. This is a demand zone. This is where all the liquidity really happened in the past. So if price were to gravitate there, that is perfectly normal and acceptable range. It just makes panic that things are over, but it's not, is just a normal. Well, not really that normal anymore. It would have been normal if it stopped like up here at the 300s, but now it's just getting a little excessive. But that's also happening in other markets too, not just Tesla, right? It's happening with Bitcoin. It's happening with
Right.
crypto. It's happening with Nvidia. It's happening everywhere. That
It's happening
it's just
everywhere.
going deeper than many people expected, and I think it just feels like they want to shake somebody out for some reason. Maybe all of these tariffs, all of these whatever, it's just going to force the Fed to cut rates massively, and things are going to skyrocket. Right? That is probably what is going to be the outcome. That Trump is just forcing people's hands to cut rates, and this is looking like it's just
Yeah, I'm already hearing. I'm already hearing musings that they'll cut rates again in June.
yeah, or even sooner. Who knows? But we'll see. But this kind of stuff, it's no matter how deep it goes. That's why I always say the structure is the most important, not really the levels, because levels can change. And the structure is for me to want to trade this cycle, to want to be in this cycle, is still there. It's still a bullish development. And even when you take off this fib here, what can you see with this box? Even if you go a little bit deeper in here, you can see all of this resistance zone, support, right? Support. You can see this is a previous very important zone breakout backtest of that very important zone. Like that's the way to think of it. This is basically something that for if you're trading cycles like Cat, like me, this is basically something that is extremely a good setup for the future. This is all I'm saying. You can believe it or not, but
Yeah, I even went as so far as I even went so far as to sell some of my bonds out of another portion of my 401k and move it into my trading account to take advantage of this and buy some more positions yesterday.
yeah, yeah. So all we're doing is trying to help you guys and understand that if you want to make the big gains, the big percentages, this is kind of how cycles start. They break out, they backtest zones. We don't know how deep they go sometimes, but as long as you're not on margin, as long as you're not overly leveraged, as long as you're not all in at the top here, buying the breakouts, then you're fine, because this is the perfect setup for something that can go massively higher in the future, right? And it's happened before. We can see like even during COVID, it was a massive breakout and a 50. No, this is like a 60% drawdown, right? A 60% drawdown right here. Yeah, 63%. It doesn't look like that back then, and it happened just basically in a month and a half, right? And this one has taken a lot longer, but essentially, it's still all this did. Let's go in the past here and take a look here. Look at this. We'll draw a box again in this zone, right? And look what it did. It went back to the demand zone right here during the COVID flush, right? And that is not, I mean, that was a scary time, but in hindsight, it's like, oh yeah, that's so obvious, right? And I made a post on X yesterday saying that in hindsight, the Bitcoin retrace is going to be so obvious too, right? And I think this is going to be so obvious as well,
Yeah,
because in hindsight, this is going to be like something probably like this, right? Something maybe who knows how deep it's going to go, but it's going to recover and it's probably just going to take off eventually. And it's going to be like, wow, why didn't I buy more? Or why did I panic back then? Right. So emotions get the best of us all the time. And I know during these times it's really hard to control the emotions, but honestly, this every chart, every chart is still kind of a bullish formation. Anything that's kind of worrisome for me is this Nvidia chart is I actually did sell half of my long-term position on Friday because I saw what was happening to the chart, and I didn't really like the setup. How the setup really looked to me when you look at the Ichimoku and the when you look at this, it was just looking like it wanted to go back and touch the cloud. And there it is. It's actually pre-market finally touching the cloud. So does this have the potential to hold? I think it does. It finally has a potential to bounce, but we need to pay attention to it a lot, because if it does start to close inside the candle or inside the cloud here, that could flip to a resistance and it could even go back down to the 90s or even go to the 100-week moving average. So we do need to pay attention to how weekly candles close here. And if it starts to close inside the cloud, then I think there's more pain ahead. and if there's more pain ahead, then it might even go to that $85 mark, right? So this is the reason why I sold half of my very long term position that I had with Nvidia on Friday for the first time. I didn't take profits the whole ride up until Friday. So that is
Wow.
basically the cycle that I try to do, right? I try to just stay in it for a long time until I see kind of like slowing down. And right now, I see things more beginning, like with Tesla and some other things with Coinbase and other things. So I think I can ride it out. I can ride out the volatility to get the big gains. So I'm used to it, but this is crazy, right? What's happening with Tesla, what's happening with Bitcoin and the crypto market, it is crazy. But it's something that I think could be very explosive in the future because of these vol- this volatility that we're seeing.
Yeah. Kim Appreciates Life asks if I'm buying more TSLL or Tesla. I did. I bought more TSLL yesterday. Like I said, I sold a bunch of my bonds position to bring it into my brokerage account, and I bought more TSLL. I bought some more ConL. I bought some more MSTX, and I bought some more Bullfrog. And we did. Tyler Smith says no IWM. I think we
Yeah,
did do
yeah, it was in
IWM
the very
for
beginning.
about like a minute. Yeah.
It was.
IWM does look like it could go a bit lower. So the person with the question about LAES, all those small caps, yeah, they could just keep going lower and find like even a lower low before it recovers again. So just hang on to those positions if you can. I would say I wouldn't. I'm not. I've got some LAES. I'm not capitulating. I'll just wait.
Yeah,
That's what we're saying. If you don't leverage, if you don't go into margin accounts, you can afford to just wait. It's just a matter of time.
yeah,
And yeah, your portfolio looks like crap. My portfolio looks like crap right now. It went from 1.2 million to like 800 and some change thousand over this last week.
yeah. It's a big drop.
I'll just wait. I'll just wait it out because it's yeah, big drop, but it can't hurt me if I just don't sell anything.
But yeah,
I did a tiny little trade yesterday. I traded MSTX when it looked like it was kind of peaking out, and I saw it wanted to do that gap fill. I sold MSTX and then bought it back at the when it filled up that gap, and I actually bought a little bit more MSTX back than I sold. So yeah, net gain. But that was tricky. Not everyone wants to do that.
yeah. And for me, like warning signs are not what Tesla's doing. Warning signs are exactly what Nvidia has been doing. Right? It couldn't ever break above resistance. And when you look at the monthly chart here, the monthly chart with all these wicks here, it looks like distribution. Like they're just distributing to retail because look at retail, like they wick it up, wick it up, wick it up, wick, wick, wick. So many monthly wicks, and it just can't do anything. So that was kind of just telling to me, and it even was looking like it was going to break the conversion line soon, and so that's why I finally got out. And you can see that uh, basically it's been above this monthly conversion line since January of 2023, over 2 years. So this is a warning sign to me for Nvidia. But what's not a warning sign is like Tesla, like Coinbase, because they're kind of just beginning, right? They're still in the beginning stages, the baby stages of their cycle, and I think they still have not even really broken into all time highs. Really, I mean Tesla, yes, but not really. It just immediately retraced back down. So with that said, I mean this is still something that's has potential to have explosive growth in the future. And I do see that the question is how deep do you think we will really go with this BTC correction? Because coin and miners look pretty bad. I don't think it's going to go much deeper. I think what we're seeing with like XRP strength still at 230, what we're seeing with H bar strength, what we're seeing with Bitcoin back down to some levels here. I think it's this zone really has potential to hold. I think what we're seeing right now around 83,000. I mean, the week just started, so it can go a little bit deeper too, right? But I think how the week closes on Sunday is
Yeah.
important, and there's still 5 days left, and I still think the potential to even close back above a lot of these levels is there. So I'm going to focus on how the weekly candle closes on Sunday. Nothing really else, but right now it's in a support zone, right? And with that said, I think Coinbase is also near it too. I can take a look at Coinbase on this chart and just show you that it's back inside the weekly cloud here, right? It's back inside the weekly cloud. And if you even go to the monthly chart too, the monthly baseline is right there at 198. And guess what? Pre market is 199.88. So Is this a scary back test? Not really, because it did it the last time too. Right, the last time it broke out massively, it took a long time to get to the baseline. This time, it took half the time to get to the baseline. Right, so that is not that scary. It's just something that's in normal range, right? Even though it's a little bit deeper than a lot of people expected, including me, right? It's still within normal range, and you can see this chart too. It's higher highs, higher lows, and it's still maintaining the momentum of a bull market. So, with that said, I cannot be too scared about it at these levels, right? In fact, I do like it, and I'll probably buy more Connell today after the market opens because I don't think it's that scary, to be honest. I think that it is within normal range of these volatile stocks. We can see that uh, last time it did that, it dropped, what was that, 50%, right? And this time from the top, if it goes to the baseline, that's only 44. So if it dropped 50, that would be down to like 170s. That would be a little bit more scary, but still, that would be a higher low, right? And this is something that still is kind of like a giant cup and handle before possibly breaking out
Yeah.
higher. So I can't I can't be scared about charts that look like this, but I can be scared about charts that look like Nvidia because the monthly chart just looks a little bit scary, right? It looks like it could drop down and maybe be red for or just sideways or whatever for many months, maybe even half a year, right? So that is something that could be scary, which kind of means that QQQ could also be in some trouble for a while, right? But some of these ones that already had massive pullbacks, they could actually benefit from things in the near future.
Yeah. So yeah, this is the kind of show I wanted to do today. Just kind of a we I guess we I don't know, we didn't do it last week because I was here last week, but yeah, it's kind of a hold your hand a little bit show. I know Matt's been doing that all week long already, but for you guys on this live show, I just wanted to say it feels bad, but as Matt just showed you historically, it's not really that bad. It's pretty normal.
Yeah.
It just it doesn't happen that often,
I think people have short memories too because
and every time,
yeah, when markets
yeah, yeah,
when things correct, like when this correction in March of 2024 down to September of 2024, I remember people were like super bearish on Coinbase like the longer that correction went. And but now people don't even remember it because they have recency bias and they just think about right now this is just terrible and they forget about how terrible it really was here until it wasn't, right? So things are terrible until they're not, and I don't think that I myself would be concerned about things collapsing. I just can't see it in a lot of the charts, but I can see it with like some of the big tech. Like I can see Amazon going lower, I can see Google going lower, I can see Microsoft going lower, I can see the mega cap go lower. I can see that, right? Because they are overextended and they kind of look something to Nvidia. But stuff like Coinbase, stuff like Tesla, they already got massively punished already, and the punishment for a lot of the mega
yeah.
cap is just beginning. So stuff that's already been punished already has a chance to recover sooner than the stuff that could be just beginning. So that's my thought process on that.
Let me just show you everyone's chart for Robinhood, just to give you an example of what we're kind of seeing in a lot of places. Robinhood for me, it did a nice 5 waves up to I can't read it there. Yeah, to almost 300%, 300% extension, and has done this ABC retrace so far just to the top of the wave three. It could go down to almost the top of the wave one, but hopefully not. Right now, it just looks like it found a bottom, a nice recovery up, and then now it's just come back to the exact same bottom. So now today's market opens because this could be a tweezer bottom. If you pull this out of the way, you can kind of see right here. See, there's a little wick right there. That's a tweezer bottom if it goes up from here. And tweezer bottoms are very strong bottoms. It's like it's the double bottom. So yeah, today could be kind of pivotal for how things go. Um, that's all. That's all I want to say. Um, you could try some tricky stuff like I did yesterday with MicroStrategy. I'm sorry, MSTX. Let's see, MSTX on the 1 hour chart. I'll show you exactly what I did yesterday. Right here, we opened MicroStrategy, was looking way high and had done this big gap up from Friday to Monday. And once it got breaks below here, I'm going to sell. And it did. And that's right about where I sold 27.50. And then I looked at where my moving average 75 was on the 1 hour chart and it said, it's going to drop right to here about 24.50. Well, 24.40, but I didn't want to miss it. So I bought it 24.50. And did it go lower? Yeah, it went lower. But that's fine. It's just a tricky trade I made. So there's no pre-market gaps on things like Hood today. I don't know. Let's just look and see if we get a great recovery. If let's go back to Hood for a second. So what I'm trying to say is, if it does look like price drops below 4402, you know, if you want to be like Matt, just be strong and just hold through it. If you want to try something tricky, you could say, well, it's testing this previous top. It could test down to here or even here. So, if it's going to drop to 40.51, maybe you could make $4 if it drops below 44. If you've got the ability to sell and buy back the same day, you could sell at 4402 and then try to buy back at maybe 8 or just 40 and make up a couple bucks on that position. That's my trading in and out kind of mojo that I like to do sometimes, but I haven't been doing it much lately. I've just been kind of trying to, peeking through my fingers and like, I don't really want. I wouldn't even be looking at my portfolio right now, except that I have to look because to support you guys.
All right. So let's see here. A ghost candle at 60,000 for Bitcoin. What does that even mean? How is there ghost candles when it's a 24-hour market? That does not make any sense at all. Um, anyways, I see somebody, Golden Parachute, talking about app and hymns. But yeah, let me just show app 11. And app 11, it kind of looks a little bit scary to me too. But nothing's broken on it, right? You can just see it did reach the GAN level up here. You can see these are monthly candles and long wicks, right? It kind of looks like it's just going sideways with long wicks. Kind of looks like distribution too. So, I mean, this is something we got to be cautious about for app 11. But technically, it's not in danger of losing any kind of support because it does have the monthly conversion line down there at 292. But essentially, I think formations like this is what really kind of gets me a little bit nervous, simply because it does look like it does not want to go higher, right? It doesn't look like it wants to go higher with all these monthly red candles and the long wicks up top. So we'll see how this month ends, but I think it might just want to go south, right? I think it might want to go south and go back down to retest these levels to see what happens in the months to come. But a topping process, it takes a long time usually, right? It takes many months. And so far, it's been like 4 or 5 months for app 11. And with hymns, essentially, I'm just looking at a big long wick right here. But hymns is super volatile anyway. So if you're going to be trading hymns, you got to withstand volatility. But right now, it's still trying to stay around this 39.42, and it's trying to basically stay around that baseline too, which is around 39.32. So it's around the similar price, the monthly baseline. So I'm going to be watching week over week to see if it can stay around this 39 level, and currently it's kind of there. It's still kind of there. So right now, it's nothing too scary because it's just a huge wick up and just a new month started to retest levels. And we'll see how far this retrace goes. It could go down to 34 because there's a lot of months here. You can see this wick up here, wick here at this fib level. So maybe 34 could be the destination right there, the 1.41 for HIMS. But HIMS I still like. I still like it a lot. And this looks pretty normal to me for HIMS, right? Big breakout, big back test, big breakout, big back test, huge breakout, big back test, right? So it's still a normal thing for HIMS, what it's doing. And this one trades like a double X ETF. It really does. So I think that's it for me.
Yep.
But you have something else,
So,
Striker, to finish your thoughts,
I was
finish
just
the
going to say,
show.
yep, just right now, this is the point at which you could either do really well by hanging in there, or you could do a lot of damage to your portfolio by bailing at exactly the wrong time. Um, so that's just my our general advice. The market's still bullish. Just hang in there because if you sell now, uh, you
Yeah.
might you might miss a lot of the recovery.
And I never sell in support zones ever. I only sell when I see big like distribution, like I think I saw with Nvidia. That's why I sold on Friday for the first time in
Yep.
many years. So this kind of means, guys, that I think we're approaching kind of a really Max Payne scenario. Even though I thought Max Payne would have been a while ago, but I think what we're seeing for a lot of things is capitulation, like maybe a slow motion capitulation. And what they did with the pre-market and the overnight over the weekend was get everybody excited, and I think a lot of people chased. So those people that chased the market open, they're getting punished now, and they're being forced to liquidate and sell and just panic out
Right.
of the market. So this is why I don't chase ever, and I
Exactly.
accumulate. The lower it goes, the more I accumulate, and I don't. The only structures that I'm worried about are the ones that had massive moves already, like your App11, like your Nvidia, like your, I don't know, Rocket Lab or LAES or whatever. Those had massive moves already, but things that already retraced a lot, like your Coinbase, like your MSTR, like your Bitcoin, like Tesla, I think we're approaching that scenario where it's going to be Max Payne pretty soon. And things don't go down in a straight line, just like things do not go up in a straight line.
Yep. So I'm just kind of putting on my screen, you know, don't buy up here, buy down here. When it's low, buy, and when it's high, don't buy. Maybe if you've got some that rode this up, you could sell a little bit to take your profit. But yeah,
Yeah.
that's all we're doing. That's all we're saying. Buy at support
But
testing,
yeah,
sell on resistance testing. Buy at
yeah.
support testing.
And for me, this is still acceptable, right? I have a very high tolerance for volatility. That's why a lot of people think I'm crazy sometimes, and I think Kat is the same way because he's numb to all this stuff too. We're kind of like the same person in that regard. But volatility is really how you make money, but it's how you react. It's how you react to that volatility is how you make money, right? Because when you get the
Exactly.
big down, that acts as a spring for the huge up. And I think you saw that with a lot of stocks, especially Nvidia. You saw that huge down that I showed you right here, right? This was a big down, right? From here to here. How big of a down was this for how many months? It was down 70%. A huge correction, but that created a violent spring to the upside, right? So if we get something similar to that, oh, and by the way, it's kind of did what Tesla's doing right now, right? Tesla's going back down to like the averages and the cloud and stuff like that, and a huge spring. So if we get the same kind of situation with Tesla, it could be a huge spring too. So that's why people that give up in this area are the ones that are usually punished the most, and they'll be chasing later. But I'm not a chaser later. I endure the pain. I love the pain because the pain does create opportunities and it creates wealth in the future if you have the strength, if you have the mindset. You got to control the emotion though, because it's not a fun ride. And holding this all throughout here was not a fun ride if you were doing that, but it paid off. If you just accumulated on the way down, on the way down, on the way down, and then boom, you're handsomely rewarded because then you have so many more shares to enjoy the ride. So those are my final thoughts for the market.
Perfectly said, Matt. All right. Well,
All
thank you so
right.
much for taking those extra minutes to share your thoughts with us.
Yeah, thank you guys, and stay strong. I'm not worried too much right now. Things are in normal ranges still, even though the normal range keeps on getting crazier and crazier. But this is, I think, with AI, the markets are going to get even more volatile in the future. So this is the new normal, right? The volatility is the new normal. We're going to have bull markets. We're going to have bull markets and
Yes.
bear markets up 20 down, up 20 down 20 in the same day. 20% up, 20% in the same day. I mean, that's just nuts to think about, but this is maybe the time we're going to be here. So, whoever is thinking about day trading, I think you're going to get crushed. So, the best thing to do is probably just enjoy the trends, ride the trends, because trying to time the short term is nearly impossible in today's markets.
Yeah,
All
be
right,
more
guys.
like Matt. All right, and then hopefully, if we do the Triumvirate show tonight, then because we haven't decided 100%, but
Yeah.
hopefully we'll have something better to report tonight. We'll see.
Yeah.
Good luck out there today.
Yeah. Good luck, guys. Bye bye.